That might be the best trade ever in your life.
That was absolutely the best trade. I probably had close to a seven-figure trading account. And at this point, I was like,
oh
how am I going to grow
gosh.
this account so I can retire?
So you went all in?
I did. I have an appetite for risk.
Oh no.
Every $10 that stock was going up, I was losing $100,000.
Oh my god. In this special episode, I had the privilege of sitting down with a seasoned momentum trader whose journey began in the most unexpected way through Neopets, an online game that most millennial kids would remember. This trader is not only very experienced, but also one of the funniest personalities I've met. Be very prepared, because you're about to hear one of the most unexpected yet hilarious stories from a trader who once fearlessly traded at the office during his full-time job, right under his boss's nose. Spoilers, this trader made some of his biggest wins and losses in the most unconventional ways, and his stories just kept on getting better and better. His name is Keith. Besides his volatile trading journey, you're gonna learn about his unique trading style, which focuses around technical analysis and indicators. In today's conversation, Keith shares his insights and pro tips on unleashing the power of technical indicators and when to use them. And trust me, some of his strategies actually caught me off guard. Lots of good laughs in this podcast and useful trading tips as well. Let's remember to smash the like button and join me on this roller coaster ride with the most volatile trader I've met, Keith. What's up, Keith? Welcome to the show.
Hey, Shay. Nice seeing you.
Keith, you're a very private person. You don't really have like an online presence or social media presence. So tell our viewers a little bit about yourself, because you actually been trading for almost 14 years now, over 10 years. You started in 2010.
2010.
Correct? Yeah. So you've had a lot of experience, certainly more than I do. So tell us a little bit about what kind of trader you are and how you got started.
So in 2010, I was still in university, but even before then, like we were talking about earlier, it started when I was in high school, actually. So I was this is when I was probably 16, 17, playing a game called Neopets, right? And
I played that game too.
And in Neopets, there's actually a stock market inside. That's the first time I guess I had a brush up with the stock market. And in the stock market, things move overnight. So you buy something on Neopets, and or one thing, a company on Neopets, and the stock price changes overnight. And you get to buy, you get to sell, or you could buy more. And so that's how I understood, what trading was. And so that's my first brush up with trading. And then fast forward to 2010, I was in university, I think third year of university, and I started looking into stocks on the stock market. And this is through my my banking brokerage. This is RBC at the time, which offered not to shade RBC. RBC is a great company, but the trading rates were horrible. Like you pay $20 a trade.
I heard.
My data was 15-minute delayed.
Oh no.
Yeah, so I was trading on 15-minute delayed data.
Day trading.
Day trading.
Did you know it was delayed?
I actually didn't until I realized. I'm just like, what does the D mean beside the the
D
price,
for delayed.
right? D for delayed.
Oh my god, that's funny.
Yeah, so here you are, penny stock trading on delayed data. Okay, that was amateur me, right? So it makes some really, really darn amateur mistakes. So, so I in 2010 I found out about MJ stocks. We got pharmaceutical companies. Pharmaceutical companies are volatile in its nature because they're
for sure.
always FDA approvals and all that. I can't remember which names now, but I bought a few stocks here and there, and then had some success. But ultimately, if you don't know what you're doing, and I'm trading on delayed data, I ended up losing a good chunk of my my savings at that time. And for I think I was 20 at the time. For someone that young to be losing, it was about in the range of $10,000 to $20,000.
That's a lot of money.
It's a lot of money. So that was probably one of my first devastating blows, and these are one of those that I'll never forget. Is losing that amount of money, pretty much my entire life savings at that point.
It was all concentrated in the MJ sector.
probably just one stock.
One stock?
Yeah.
Oh.
So yeah, I would put my money in and then go on these forums like the forums like Investors Hub, do your DD, and then
Yeah.
yeah, obviously I don't do that kind of reading anymore. I'm more strictly a technicals trader, but yeah, that's what it was then. A lot of lessons learned through not who not to trust and not trusting forums, and doing DD is because technical trading should be separate from fundamentals trading, and the more you mix it, the more murky your decisions become. So yeah, that was in 2010. Going on with my story here. So 2010, I lost a good chunk of my life savings, and then it took a while because it took a while to gain that capital back.
Yeah.
And to gain that capital, I had to graduate, and I had to go find a job, and then work hard for my money, and
for sure.
save again. So that's the difficult part, is every time you blow up, to gain back that nest egg, to try to take another stab at it is it's a huge mountain to climb. So I didn't save up enough until probably 2014, when there was another run, and I think I had another.
That's when you recovered the 20K loss in 2014 with your job.
Recover it by working.
By
Yes.
working, yes, from a steady, good old 9-to-5 job.
Yeah.
Yes.
Yeah, that's what everyone likes, right?
Everyone
Stability.
needs it though.
I
In
think-
the beginning, everyone blows up. Yeah.
For sure.
Yeah.
Everyone blows up, in different ways.
Different sectors.
Yeah, different sectors.
Different ways, but
So this is leading into my second blow up.
Oh,
And-
okay. There's a second one.
Yeah, there's a second one.
Okay.
So yeah, I saved enough working my engineering job, and I think I saved up another 20,000.
Okay.
This time, and I had a little bit of experience in my pocket. I understood now that there's delay data.
Okay.
So
You upgraded to real time.
I've upgraded to
Okay,
real
okay.
time, and I subscribed to a different charting software. I can't remember what it was, but now I have charting software and I have real-time data.
Okay.
And so I tried again on a run. And they go in cycles, these MJ runs. That there's big pops in different names, and so I put my money in, and this time I remember showing one of my coworkers, like, I put $20,000 into this stock. I'm up 100%. I made $20,000 in literally overnight, because it was up 100% overnight.
Oh wow.
And
Right, penny stocks.
it was
Very,
penny
very
stocks.
possible.
Super volatile, right? And you can
Yeah.
imagine like my emotions at that time. And so this is very memorable. I remember sitting, like, this is at work too. Like, I told my coworker, I was like, and this is a coworker I was really close. I was like,
Okay.
hey, like, look, I just made this much money overnight. And he's like, wow, you know how long it takes me to save up that much? Like, because he has a family and all that.
Yeah.
It takes an entire year to save up $20,000 sometimes.
sure.
Sometimes even longer. And he's like, if you keep doing this, Keith, you might be able to, like, retire. Right? Like,
Is that what sparked your idea of that initially? Like, oh, maybe one day you can quit your job and just trade.
oh, this is always in my mind.
Oh, okay.
And you know what? Like, I even talked to my boss about this before. I was like, we're not going to retire. Like, especially in this day and age, like, inflation's so high and everything's so expensive. Like, unless you have a steady, good job. And, I come from pretty middle class family. My dad worked in a warehouse. My mom works in a minimum wage job. So, that was always the life kind of plan.
Yeah.
Is, find a good job, work the rest of your life, and, have a good pension so that you can retire by 65. Me being me, I've always had an appetite for risk. And, obviously with that trade, you could see, like, I was pretty risky, and that like $20,000 again was all my money, right? Like,
Yeah.
put
So
into a
wait, so
penny
you
stock.
went all in?
I did. I have an appetite for risk.
All in. Well, was it all like $20,000 cash, or was it margined?
That was cash.
Okay,
Yeah,
but
that
still,
was it.
it's like 100% of your capital in one stock.
That's right.
Okay.
My mom always told me, like, she used to work in the banking sector, like, never go on margin, like, because I'm Chinese, and this back in my parents had this experience back in 1997 in Hong Kong, where the stock market started to crash because of the Chinese government taking over, and there was a lot of uncertainty in the markets over there. People ended up jumping off roofs. Because they lost everything. Yeah, so very scary times, and those people they owed more than they have. So one of the lessons learned is never go on margin, and this could ruin your life, right? So I took that lesson I took that my mom's suggestion into account, and just trade with cash.
Okay.
So if you lose everything, you just start from zero again.
Yeah, zero is better than owing the broker money.
Yes.
So in that sense, you were more conservative than most, because a lot of people take a margin debt.
It's all relative, right? All in, come on.
Okay. So did you sell that $20,000?
Oh, I did.
Game?
I made a lot of money at that time, right? But the name of the game is to try to keep your money. You and I both know that a lot of people get rich. But who can stay rich? Yeah. Not even rich. Just a lot of people can make money on the markets, and it's literally a coin toss sometimes.
Yeah.
So if half these people are all in, and half these people are all in, some people are going to lose all their money. Some people are going to double their money, right?
Yeah.
So I think from that standpoint, I think I got lucky. But I think some experience played into it, because leading up to that 100% gain in 2014, I started to spot patterns in charts.
Okay.
And I didn't quite learn. I learned a price action. I didn't quite learn volume yet.
Okay.
So that's the second most important thing to pay attention to, right? So over time I would learn volume, but at this point in time, it was all about price action. I was spotting patterns that I couldn't. I have a photographic memory of certain patterns that to pay attention to leading up to big runs.
Okay.
So fortunately for me, I was able to sell at that point. I did make $20,000, but eventually through these pharmaceutical companies and throughout the end of the MJ run, it got greedy. And so you're holding, you buy a stock, it goes down, and you're like, okay, it's just gonna come back up, right?
So were all these day trades, or kind of a lot of short-term swing trading in the MJ sector?
I would say a lot of it was short-term swing trading. So you hold overnight, sell the next morning.
Okay.
Because in a lot of these stocks, they would gap up 20, 30, 40, 100% overnight. Sometimes they would go 100% and another 100%, right?
Yeah.
And you want to hold on to some of these stocks that are mooning.
Mooning.
Yeah. And so sometimes you overstay your welcome, and you take a punch in the face. So that's what happened to me. Is I made this $20,000, had some success, and lost it all through a lot of tiny cuts here and there.
Okay.
And eventually, the rest of it just is bag holding. And eventually, actually, you know what? What's funny is that I still have one of these stocks in my RBC brokerage account.
It became an investment.
It became an investment. It's still bag holding. It's still there. So it's been 10 years.
So you still have it?
It's still 10 years.
Wow. And
I'm not allowed to sell it. I can't sell it.
Oh, it's delisted?
I think it's delisted, or it's I can't remember what it was, but it's halted from trading. Nobody can trade it, but it still exists. Is the thing.
Okay. I guess that's the nature of trading these pink sheets.
Yeah.
Or OTCBB, right? That's
right. Yeah, OTCBB.
Okay.
Yeah, so that's 2014, and then so I lost everything again. That's my second blow up.
Is that also the same year that you made the $20,000?
Yeah. So it happened probably.
So
within
slowly bled out.
Maybe 2 months.
So you took a lot of expensive lessons from 2010 to 2014.
Yeah, and I would say those impacted my life the most because at that time it was everything I had. So yeah, just at that point, I just stay at home, keep working, keep grinding, and keep working back at it.
I think the good thing is that you never quit your job that early on.
Yes.
So you had the foresight of knowing that you might need more funding.
$20,000 isn't enough to quit your job.
Right. Yeah.
I don't even know if back then or even 20 years ago if that was enough, but I think until you're able to have maybe 5 to 10 years worth of nest egg, I wouldn't quit my job. And that probably is something we talk about later. That my thought process on how I even ended up quitting my job.
Yeah.
It took a while. It took a while.
So we just learned that Keith found trading through Neopet, an online game. So that's a very interesting beginning. Do we have any millennials here who started trading on Neopet or any online forums? Let me know down below. Okay, so you took a lot of expensive lessons. What do you think, and then in which year do you think was the time where you finally kind of like clicked for you and you started getting more actual consistency in your trading, whether it's day trading or swing trading, where it's a lot less like up and drop. It's more steady grind up in your P&L curve.
Your account, setting your higher lows, higher highs,
yeah.
higher highs.
Consolidation into a bull flag and breakout.
Yeah. So 2017 rolls around. Actually, even before that. So 2014 was my second big blow up, and in 2015, I was working a lot at that time, and I managed to save a little bit from that last blow up. And I thought at this time, I was 27 at the time in 2015. That's that, people are doing the math. I'm 35 today. So 27 at that time, I was like, I have to move out. I'm an adult now. I got to move out of my parents' shelter. Experience life a bit here, right? Actually, it's probably a bit late. Like at that time, I felt like I was a bit late because I think a lot of people move out a lot earlier than that, like experience, learn life skills, right? And so I was searching on the real estate market in 2015 to buy a condo. I was like, enough of this trading stuff. Maybe it's not working out for me.
Oh, so you were about to give up?
Oh yeah, a little bit. Just two big punches in the face was enough. So 2015 rolled around. I bought a condo, and even in 2015, I thought those condos were so expensive.
Yeah.
And so we live here in the Lower Mainland in Vancouver area, and I bought my first condo for $470,000 for a 900 square foot condo. And this is like maybe a 10-year-old condo at the time.
That's so cheap.
That's cheap.
That's dirt cheap.
It looks cheap now, but when I was searching at the time, I was like, wow, everything's so expensive, right?
Yeah.
And I'm looking at all these places I could possibly afford with my one income, so a solo income. And so I ended up buying this place. And then I met my then girlfriend, now wife, in 20, towards the middle of 2016. We started dating. She had her own condo at that time, right? So I was like, okay, well, it doesn't make sense for us to have two condos because we started becoming more stable. Ended up selling my condo in 2017, staying with her. And there's where all my seed money came for my next...
That might be the best trade ever in your life.
That was absolutely the best trade, like 2015 to 2017 in Vancouver was, probably all around North America was probably one of the best real estate gains. And I got lucky. I didn't know the real estate market that well. So I bought in 2015, sold in 2017 for almost a 50% gain on that condo. And I was like, what do I do with all this money? I was like, let's put it in some lot of stocks.
It was 2017. Okay, that's actually a good timing.
Oh, it was great
I feel
timing.
like each time you get into these MJ stocks, good timing, and also you learned your lessons from the last two big blow-ups.
That's the actual probably one of the most important things is I got two blow-ups out of the way, and I learned some pretty important lessons, and those lessons were never go all in on something.
Yeah.
And the next lesson is and not so much lessons, but experience in trading, understanding charts and how they move, recognizing patterns. And by this time, I knew what volume was. I understood some different technical indicators, but I was still trading by myself at that time, not with any sort of group, with assistance from others, people who had more experience than me. So along the way, I learned how to spot price action, what kind of patterns formed, the different types of volume, the volume that's coming in, whether it's increasing or decreasing volume relative to the previous day's action or relative to the previous time frame, depending on what time frame you're trading on. And then some other indicators I started using is the RSI levels.
Okay.
But not strictly because of the RSI, the value itself, but more of divergence on the RSIs, right? And ADMA, the exponential moving average, I didn't really use then, but now it's a big part of my trading. But really, at that point, it was just volume and price action and patterns that had formed. Those three basic things that really propelled my trading career in 2017 and 2018.
Okay.
And so that's, I put a portion of that condo money that I had into Aurora and Canopy Growth. And this is October 2017.
Oh, wow.
October 2017. Literally the week before it rocketed. So
wow.
I can't say like, that was definitely a lot of luck. But that definitely helped me produce some seed money, well, not seed money, now the house money to take more risks and kind of snowball that into bigger and bigger gains.
So when you took those trades in those specific MJ stocks, was it more like you saw on the charts, like technically speaking, that they are, like you said, the increasing volume on the daily, like the patterns forming RSI levels? Were you taking those trades based on the technicals? Or were you just hearing a lot about potential legalization and all that stuff? So that's more like fundamental.
Yeah.
Which side were you?
I think at that point, I know, like I was doing a lot of research into which were the biggest companies that stand to gain the most when Canada legalizes. And so I think, I pretty much zeroed in on Aurora Cannabis and Canopy Growth as the two biggest ones. And these two companies stand to gain the biggest, or have the biggest buzz around them. And at that time, ACB and CGC were consolidating and probably months and months of consolidation. So I just bought right in, and I was like, you know what? If I buy here, and another cycle of news comes out, these stocks are gonna rip.
And they did.
And they did.
Yeah.
And they did for 2 years straight. And so, like through the experiences I've had before, I took some of those gains immediately, but then I started spotting some of these patterns that I had seen previously back in 2010, 2014. And I just knew, like, if the price closes on a certain pattern, and it ends up, like the daily candle ends up a certain way, and let's say the hourly or 15-minute charts look a certain way, and the volume looks a certain way, then this is worth swinging. And you buy at the end of the day and you swing overnight, and it gaps up 20%, 30%. So and I took major risks at that point as well, like, and it happened a lot again and again, 30% stacks and gains. And that's pretty much how I grew my my account early on in the MJ heydays.
Oh, so were you kind of like with the first trade, were you kind of scaling out and then re-adding back in on the daily? So you were swing trading for an extended amount of time.
Oh yeah.
So you weren't buying and holding. You were selling, rebuying on the dips, and selling the breakouts and redoing that, essentially. Position trading.
That's right. So it was never like an investment. It was never, I probably didn't hold things for more than a few weeks. And at that point, a few weeks is a long time now for me.
Yeah.
Because I'm more of a daily swing trader, and scalper. But yeah, then it was more of swing trading and just buying at the end of the day and selling the next day versus scalping. And so I did very little scalping at that time. It was more of daily pattern recognition and swing trading. And that's where the profit really came in, is taking advantage of gap and runs, just overnight gap ups, but then also figuring out, like, how far is too extended for a chart, and what is the probability of something consolidating versus gapping up and running, right? And that really depends on the pattern and how far extended it already is. So, that's another aspect of my trading that came from my background as an engineer, is statistics. And mathematics. And so I was able to crunch numbers pretty quickly, understand the risk, understand probabilities of something happening, one outcome happening over another. And I drew on my experiences on what's most likely to happen. And so that's kind of the aspect of gambling, of trading, right? It's probabilities. Like, anyone can go into trading and be somewhat good at it, depending on your luck, but it's ultimately 50-50. If you were to buy any sort of stock today, Apple today, at the end of the day, and sell it tomorrow morning, you're either up or down. If you were up, you could have easily taken the opposite trade, and you would be down the same amount minus your commissions and spreads. So that's that's where I kind of had an edge is understanding, drawing from my experiences, recognizing patterns, the volume patterns as well, and then assigning probabilities to a certain outcome.
Well, I hope you guys learned something from this trader's experience trading the MJ run in 2018. But kids, there's no MJ around here. The only greens on this channel are the green P&L curves, hopefully, and the humble trader's favorite Lamborghini and the like button. So remember to smash the Lamborghini button right now. So would you be tracking a lot of these probabilities with like volume and certain stocks, certain sector? How did you track these things to know the probability of a certain setup succeeding?
I wouldn't track it per se. So like, I think a lot of people, take a pen and paper and write down what they remember. But I'm more of a photographic memory type of guy. Like, I remember like when I take a look at a chart, I can instantly see whether or not it's a good setup. Like, I don't need to draw it out. I don't need to write notes on. Okay, it needs to be setting up this specific way for me to remember in the future what the setup would look like. And perhaps that photographic memory was from like my 2010 and 2014 blowups. Like, you never forget those. Like,
right, yeah.
You're like, wow, like what happened, right? Like, so it was so important. And this is something I left out, is in 2010 and 2014, I took a lot of time reviewing, like, what happened? What did I do wrong, right? Like, and
you studied your losses.
I studied my losses.
Yeah.
And so you take that kind of experience and those kind of notes, and you move it forward and apply it to future trades.
Okay.
Sorry, I don't know if I answered that question. Like,
no, I was just wondering, because some people, like what I used to do when I track certain setups is I actually have an Excel sheet.
Yeah.
And I will track the tickers, the percentage high versus the opening high, and see the probability of, let's say I want to trade a gap and go setup, the probability of that succeeding. So that's what I used to do. Some people do that, but
it takes a lot of effort.
Yeah, for sure.
It's a lot of effort and time, right? Where time can be used to focus on figuring out what the next best setup is versus like trying to, go back and record your performance. So at the end of the year, I'll go look at my performance and have a big Excel spreadsheet of all my trades. But I wouldn't say like I go into every single trade and see what my performance was on that trade. So I guess I don't do it that way where I'm swinging into a gap and go, what I think is a gap and go setup, and what the probability is of or what my performance is on the gap and go setups that I'm swinging. So yeah, I have none of that information because I never took the time. I'd rather spend that time, sleeping, which is like we lack sleep.
Yeah, on the West Coast, it's like
for sure.
Yeah, it's tough. Yeah. So it seems like you're a very technical focused trader, right? You mentioned indicators, volume, patterns. Do you think the way you look at technicals and the way you kind of use these patterns today, is that different from when you first started? Did you have what was your style like when you first started versus now?
So it depends on what the reference of when I first started. When I first started, I knew nothing, right? Like
2010, 2014.
I knew delay charts. That's all I knew. So we're picking up stuff along the way. But fast forward to today, like I said earlier, is a lot about two primary ones. It's everyone should always focus on, and not really, in my opinion, is the chart, the price action, so the chart. And also the volume. It's
price action and volume.
Price action and volume is really all you need. And there's different indicators that we can use to as secondary let's say opinions of what the chart is doing. So just that's to guide us. But if the price action and volume doesn't speak to you as favorable, like no other indicator really is going to matter. And this is what I teach as well. So those, I should go down to the secondary indicators. The secondary indicators I use again is RSI. So specifically bullish and bearish divergences. I use the 8 exponential moving average, and that's actually very useful whether or not you're on the 5-minute, 2-minute, 5-minute, 15-minute, hourly, 4-hour, daily time frames. even the weekly time frame works. So weekly obviously is more of an investment level like chart now, right? Like, but daily it matters a lot on the daily because the charts, a lot of charts react off the ADMA.
Okay.
More so than I would say even the vwap. And I know a lot of people use vwap. I know you use vwap a lot.
VWAP, yeah.
And so vwap is good when you're looking for a pivot when it's consolidating, right? You're moving, you're getting a pivot. Whereas ADMA is more for momentum.
Okay.
So we're looking at momentum trades because the ADMA tracks the price action quite closely, rather than the VWAP is going to be a little further away from if we're in a big momentum day, the VWAP's so far gone, it's so far away, so it's tough to use that when you're in a momentum trading. And I'm a momentum trader now.
Okay.
So I'm always looking for stocks that are that have had recent price runs, whether or not that's bearish or bullish. So we're looking at stocks that are consolidating off a big run. And so we're monitoring the health of the consolidation, making sure it's healthy. Are we getting decreasing bear volume? And how was the bull volume on that big run? And I would use a Fibonacci retracement, so a tool on the charts to see how far has it retraced from where it took off from and where it peaked out on, and how is this consolidation right now? Is it healthy or not? Is it high volume? Is it high bear volume, or is it is it low bear volume? Assuming it's a bullish trade, right?
Okay. So use your 8 EMA on the daily and intraday.
Yeah.
Okay.
8
and your
EMA.
Fibonacci on the daily.
Yeah, Fibonacci when it's consolidating, figuring out like how far it's consolidated, right? Like are we past the 0.236? Are we past the 0.382? Are we past the 0.5? Or are we at the golden pocket at 0.618 to 0.65, right? So that's they're very kind of important secondary tools. But again, if the volume and price action isn't favorable,
right,
there's no use in using these secondary indicators on figuring out if there's a trade idea or not.
So do you use the secondary indicators as a way of potential entries exit, or just to reinforce your thesis from reading volume and price action?
That's right. That's a good question. So yeah, it's so say like we're in a momentum trade and we've lost the ADMA.
Okay.
But on what volume? That's a really important question, right? Are we losing it? Do we have really big bull volume and all of a sudden we're consolidating on tiny bear volume?
Yeah.
And the tiny bear volume, we're losing the ADMA and some of these secondary indicators. So the question is, do you pay attention to the secondary indicator or the volume? And so I would always tell people the volume speaks to you more because it's telling you there's no sellers. It's selling on low volume. Although there are exceptions, right? There's always exceptions to everything. It's the market, and it's crazy. There's everything has happened that you could think of, right? And so it's never a guarantee. It's never a one-way street where this indicator or this volume must tell you to do something. You kind of use your own judgment. All right, it's consolidating at low volume, but we're past the 0.5 on the fib. We've consolidated more than 50% of the way up. Yeah. Despite its low volume. Hey, look, that play is over, right? Let's give up and let's move on.
Okay. So technically, by what you just described, technically you can trade without any of those indicators and just use volume and price action.
That's right. But they've improved my trading game a lot. Like these secondary indicators, to me, is a game changer.
Okay.
But yeah, if you were to blindfold me and not let me not use those indicators again, I could still be a relatively good trader just with price action and volume, just recognizing patterns. Okay. And these patterns, like you said, bull flags, they happen all the time. If you were just to play bull flags and you see the percentage probability of those playing out, you buy during consolidation, you sell a little bit on the breakout, you're probably going to be a profitable trader. The problem is people like to overtrade. They force trades that aren't quite there, or overstay their welcome, and hold through a breakout or even a fake out breakout. Oftentimes you see bull flags or bear flags. They confirm, they break those highs or lows, and then all of a sudden you get the wake of death. Right? That happens
fake
a lot
breakout.
too. The fake out breakouts.
Yeah.
And they happen, right? So you just as traders, we don't know what the follow through is going to look like when it breaks out, but we know we can control the probability of our entry before we even enter. So you recognize a good trade, you know the probabilities. We just don't know the probability of if it's going to get follow through.
I see. So it seems like after so many years, your strength and your edge as a trader is in kind of putting all the information you just mentioned together, right? At a lot faster and maybe with a little bit more conviction than you did in 2010 to 2014. Now you know how to read all the pieces of information.
Oh yeah, conviction. Yeah, is a good word, right? To put it is once you have that experience, and this is why like it's so tough to copy trade. It's so tough to teach others to trade, because where do you get conviction? It's through experience.
Yeah.
And the experience only is with me. The experience is with you, but you can't transfer that experience. Like the losses, you can't draw from that, right? So unfortunately, like, people who are starting off to learn trading, it's most difficult because you don't have that experience. So where do you get the conviction? Where do these people get the conviction? It's through other people who have conviction. Yeah. And people who have conviction have experience. And so that's why it's tough for, I think, newcomers and especially people who haven't blown up before too, right?
Oh, yeah, you definitely need a few blow-ups to learn some lessons.
That's your tuition. And hopefully they're small blow-ups, and you're not playing with too big of money that you can't really recover from, right?
So now that we know you are very technical based, price action, patterns, how much attention do you pay to catalysts or news?
That's a really good question, right?
Just curious.
It's funny because like I speak once a week. I talk for an hour, right? Like, and all of a sudden I would get punched I'd get punched in the face because it's CPI day, or it's like
like today.
Or like today. There's CPI. There's the Fed minutes, right? Yeah. And that moves markets. And sometimes I would not know about it, and I'd be like, oh, there's volume coming in. What's going on? And it's a little bit embarrassing because like I would have viewers and be like, oh, it's Fed minutes, Keith. So I'm like, oh, okay. Like, but my theory around news and understanding fundamentals is you'll see it on the chart. You'll see whether or not it's bullish or bearish news, if it matters or not, because you might get bullish price action, but there might not be volume behind it. It means no one's paying attention. Or if the news comes out and the chart's not reacting, then that means this news doesn't matter, or it's already been put out, right? So my theory is, and I draw from my experience, is news is reflected on a chart. You don't need to know what the news is. You just need to know if it's bullish or bearish, and what the chart is telling you, whether or not it matters or not.
Okay.
So whether or not it matters depends on what the big money is doing, whether or not the buying or selling or dumping it, right? Now a lot of these pieces of news, you should pay. I don't think you should put too much weight on it. Okay. But to understand, it's just to know what it is. Oh, what is it? Like, is it actually fundamentally changing to a company, or is it just fluff news, right? I think that's just how I evaluate it. It's more of a black and white scenario. And how I evaluate that is, if the news changes like the bottom line of a company, like is Microsoft buying out or acquiring another company? Activision, right? Or are they undergoing a share change? Are they diluting the shares, right? So that really matters in the company. Or sometimes are they undergoing a share split? Because some of these share split news will fuel the price action in a stock. So some of those things are good to understand, and just understand what's coming up. Like Tesla back in I think 2020. Yeah. 2020?
Tesla, Apple, they did it at the same time.
They did the share split.
Yeah.
And so every time Tesla gets a share split, we know what happens. Yeah. It runs. Tesla's getting acquired by no, not acquired, sorry. What was that? There's a big piece of, no, S&P is going to list Tesla.
Oh, yeah, that was big news.
That was big news, right? So funny enough, I swung that day beforehand.
Did you know?
I didn't know.
Oh, there was some murmurs.
Tesla was, I think, breaking into no, it was a long consolidation. I think it was in a triangle at that point when Tesla actually got that news.
For a while.
Daily, maybe even weekly. Then it got a big breakout. So I was playing the pattern. I was playing triangle.
So that's what you mean by a lot of times the technicals will kind of confirm the news too. That's when it broke out. The
technical sometimes confirms the news, and it's kind of a bit magical how that happens. Is you get a pattern, we know which way it should break out, which way a pattern should break out, and all of a sudden you get a piece of news that causes it. Like you're like, did somebody in that company know about this like pattern? Right?
Somebody always knows something, I think.
Yeah,
in the stock market.
It's weird, and it happens a lot.
Yeah.
More than so it doesn't feel like it's by chance, right?
So we learned by now that Keith's momentum strategies involve a lot of indicators and price action. So comment technical analysis down below if you want to learn more about price action, indicators, and chart patterns. And of course, if you have any questions for Keith, you can ask him down below in the comment section. Is there any tools that you're currently using? Well, I guess, is there any tools that you're using to help with your trading now that you wish you had when you first started 10 years ago?
Like trading tools?
Yeah, for your technicals, for...
So I think you know by now I'm a pretty simple trader. Like I used to have a lot more indicators, and like the more indicators you have, the more convoluted your decision making becomes.
I agree.
Yeah. So this is I see people's charts and there's so many lines on there. I'm just like, how do you know which line to pay attention to?
Yeah.
Like, how much conviction? If it goes through this line, how do you know it's going to bounce off the next line?
Yeah.
Right? Like,
how do you know which one to look at first?
That's right. So like I keep things simple, and so I've mentioned those few indicators that I use, but the main one I think I would pick up and I would use more often is the ADMA.
ADMA.
ADMA is probably one of the golden ones that I would if I were to speak to myself.
Okay.
When I first started trading, pay attention to the ADMA because the reaction off the ADMA is uncanny.
Okay.
Especially on like let's say algo days where stock is just like every dip is being bought up. You're on a 2-minute chart, and it'll bounce off the 2-minute chart, off the ADMA every time it consolidates off the 2-minute ADMA, and it'll confirm to a higher high, and then it'll lose the 2-minute ADMA. Then you flip over to the 5-minute chart, and the 5-minute chart will grind off the 5-minute ADMA, and then it'll bounce off the 5-minute ADMA a few times, and then you lose the 5-minute ADMA. Then you flip over to the 15-minute chart. And it'll
so
hold
you
the 15 minute
confirm across all the time frames.
That's right, but that's momentum. Usually in the beginning of the day, you get big volume, very sharp candles, either moving to the upside or downside. So this works bear and bull. And then eventually you lose a 15-minute ADMA, you get hourly consolidation, and so on and so forth. But that's how we keep in trades during momentum, is that ADMA indicator, and it's been. It almost feels like a cheat code sometimes. You're looking at a stock that's in absolute momentum. Obviously, the prerequisite to using the ADMA on a day like that is volume. We want to make sure that volume is high relative to the previous day's volume.
Okay.
So, yeah, I think the first 5-minute candle of the day will tell you that whether or not we're going to have a big day or not.
Yeah.
Is the first 5-minute volume candle dwarfing the previous day's opening volume candle, right? And that's going to be one of the big things I would look for.
Okay. Interesting. Yeah, I've used VWAP and volume together for a while. ATMA, maybe I'll look it up.
You gotta try it. Just keep it on your chart if you're not like used to it. Like you're like, wow, it's especially on momentum stocks. You look at the 2, 5, 15 hourly. It's a game changer. But those are the indicators I use, and that's my edge, right? I know you're a successful trader. You have your own edge, right?
Everyone trades a little bit differently.
That's right. And these aren't the only indicators out there, right? Like there's so many indicators out there. Somebody has created it for a specific purpose. Sometimes we don't know what it is. Sometimes we don't know how to use it properly. But somebody had an edge using a specific indicator before. Sometimes it's hard for different people to apply it properly. So I found my edge. I know what I'm comfortable with, and this is how I have an edge in the market. And that's an edge is a higher probability of making money when I take trades.
Yeah. So I know in your first, I guess, all the way leading up to 2017, you were doing a lot of swing trading. When did you transition to doing more day trades?
Yeah, so up until 2017, I was still working a full-time job.
Okay.
And it wasn't until like the end of 2020 where I quit my full-time job. But so it's very important from that standpoint because nowadays I do a lot more scalp trading, but that's because I'm able to focus more on the smaller time frame candles. Like I can't be distracted by something like, hey, my boss is telling me to do some work, right? Like, and all of a sudden you're pulled away from your computer.
Yeah, well, you have to go to a meeting.
You're in a 2-minute bull flag. You're like, okay, well, I hope this turns out well, right? Like, it's not.
Usually it doesn't.
No. Well, sometimes, again, a 50-50 analogy. Hey,
Yeah.
this could continue running or it could just fake out and break down.
Like you
we don't
said,
know.
it's a coin flip.
That's right.
Yeah.
But hey, if you're in a bull flag, that coin flip it's a weighted coin now. It should if it's a bull flag, it should break bull most of the time. If you're recognizing that bull flag correctly. So in terms of trading style, it was definitely swing trading a lot, especially when I was working, because there's not a lot of time to manage a trade on a smaller term time frame. So that played into my hands very well, because during the MJ run, it was everything was just gapping up. So all you had to do was buy. We're in Vancouver time. All you had to do was buy during lunch.
That's true.
Right? You buy during lunch
break, buy some stocks, sell it next morning.
You're on your lunch break. You're looking through all the daily charts here, and you're seeing, okay, what's a good setup? Like, are we closing on a Marubozu candle and at the highs of the day, and we're getting increasing volume into the end of the day, and we're not too far extended, so the chances of this gapping up is going to be very high. Let's take a big trade right here and see if we can get like a 20-30% day the next day. And you sell the next morning, then you go to work.
Then you go to work.
Then you ask yourself, why should I even go to work? Like, right? Why should I even go to work? Like, you just made like 20,000, 30,000, like however much in a day. And you're like, now you're going to go to work and make $300. Right? Like,
it's part of the process.
Yeah. But it's not always great like that, right? We have big wins. We have big losses.
Yeah, there's gap down days too.
So, the magnitude of wins usually, hopefully it doesn't always equal the magnitude of the losses. We try not to let that happen, but there's always give back.
Yeah.
And that's how we set our higher low, higher high pattern in our account.
For all my part-time traders out there working a 9-to-5 full-time job, be careful if you're watching this in front of your boss. Okay, just kidding. Do you guys resonate with Keith's experience? Remember to give the video a thumbs up if you have been enjoying the story so far. Do you pay any attention as a technical trader to level 2 and time and sales?
It's funny enough. That's actually one thing I used to look at. So level 2 time and sales, and
so not anymore.
Not anymore. I actually don't pay attention to that at all.
Okay.
And I think that matters more when you're trading on like a micro time frame. So let's say like 2 minute, 5 minute, and that's just my opinion. But what I pay more attention to is more of dark pools and options flows.
Okay.
Now. And so in our trading room, we have some experts that are looking at the options flows and dark pools and what big money is doing. So and I guess this matters more for big companies like Apple, Tesla. Like, what's unusual going on here in these stocks?
Yeah.
So that's technicals, but it's also like you can't actually see or assign a probability to those things.
No, really.
Because this is big money trying to move their money around, and you're trying to think about what big money is thinking. You're looking at these trades and you're trying to analyze, all right, what's this whale thinking in terms of which direction this is going to go. And even if you think that they know it's going to go up, is it going to go up tomorrow, the next week, or is it a month later? What time frame is it? It can be a hedge
too.
That's right. Or it could be a hedge. So you don't know, like, in terms of that, which is why it's important to, like, you could look at options flow, but you need to really look at see what's unusual out there. But I wouldn't say I use options flow as a primary or even secondary tool to guide me in what trades I take.
So just technicals.
It would be nice to know that, if I'm betting in a certain direction, that, the whales are also betting in that same direction, right? Like,
It'd be nice to know.
But now you're kind of biased, right? Because if you know the whales are betting in direct, or big money or institutional traders are betting in a direction, and before you take your trade, now you got to ask yourself, are you being biased? Like, I'd rather not know, and then I find out later that, okay, well, it makes me feel a little more comfortable about this trade now. But I still have confidence in the trade anyways, because I recognized it myself. I came up with a trade idea, and this is what the chart is telling me, and in terms of probability of something happening in that direction.
What made you decide to stop or use less of the level 2 and time and sales?
Oh, in terms of level time, sorry.
Yeah.
That was the initial question. I think I just moved away from trading smaller time frames, like 2 minute charts.
You don't use it for scalping though?
No,
I scalp intraday.
I do scalp intraday. So maybe it's because I don't have enough experience in it, or if I don't have that edge in looking at level 2 time and sales. But not to say that it doesn't work, because I know you use it extensively. I know a lot of other traders use it extensively, but my edge is through still volume, price action, and understanding which way, like the probability of something happening based off of what I currently see on the chart. So volume really matters to that, because if we move into a certain price range from a big move, whether or not it's bull or bear, and we're holding that price range relatively well, and there's no sellers, or even let's say there's no buyers on the bear side, right? It tells me like that price range is being supported.
Yeah, it's consolidating.
It's consolidating, healthy. It's healthy consolidation. It tells me that it's unlikely this stock is going to just like be a mountain on the way back down, or V-shape back up, right? It tells me that it's setting up for a next move to the same direction. Okay. And so, perhaps time and sales would tell us that, but I've already seen enough on the chart that tells me, okay, the probability of this getting continuation is already really high. So, that's just another tool, right? So I've decided personally that I don't use that tool, and I don't need it in terms of my style of trading.
Yeah, that's fair.
Yeah, I've already found an edge in terms of the handful of tools that I already use.
No, I'm only asking because there's more and more traders I talk to who are kind of abandoning level 2 and time and sales.
Really?
Yeah, pretty much after 2020.
How come?
It's very difficult to find anything meaningful and accurate from level 2 and time and sales.
So it's things that are unusual that's happening on the level 2 time and sales.
I think there's still a lot of things unusual, but like the volume, like everything's just going by so fast now. And I think like I've had more experience, especially in like 2021, reading what I thought was right, trading what I thought was I saw on level 2 and having that cause a bias and causing me to lose. Yeah. So I have a couple of experiences. So now I'll take a look at level 2, but I will not trade based on what I saw.
Yeah, the market's...
Yeah, it's getting trickier and trickier.
The market's constantly changing, and we have to continue adapting, right? To make sure... this also depends on the market cycle and what's happening on the markets, right? No one strategy works for all market environments, and I think that's one of the lessons that I learned early on is if you keep trying to force trades during, let's say, everything was great in 2021 and 2020, right? Like, you could have bet on anything.
Everything's mooning back then.
Does that make everyone a good trader, right? and does everyone feels like they're a genius? But as the market changes, we need to adapt, and whether or not we need to adapt as traders, and recognize that if my trading style does not work for this environment, like I just got to take it back. Like I'm taking too many losses here, and just kind of reevaluate. Hey, maybe this isn't the right market environment for me to apply my trading style right now, or perhaps I need to change my trading style in order to adapt to the market. For instance, like, let's say the bear market last year, at the beginning of the year, I don't want to say that I predicted it or something was coming, but I was expecting a big bear market to come at the end of 2021, and lo and behold, it did come, and I was the biggest bear for the longest time last year.
You were just shorting everything.
I was shorting everything, and I was sometimes I would be playing oversold bounces, so like it was a handful of bull trades, but mainly they were bear trades because it's just nonstop momentum to the downside. And so I think last year was a big year for me as well, because I was able to adapt. Now this year I'm slower to adapt to a bull market. So like so this year was a more difficult year for me, despite everything. Some things are in all-time highs. Nvidia's in all-time highs. Apple's in all-time highs. It's so bizarre. But due to my slow ability to adapt, it caused me to not be able to take advantage of the opportunities that were present. Now this also like stems from my lack of focus on the markets. I have different ventures that I'm looking at right now, and also I'm just taking a break from time to time, taking vacations because I just need a break from the markets. It's been a crazy like 5-6 years of trading, and I've just been a bit burned out. And so focus matters a lot too, right?
Yeah, for sure. So going back to your trading experience, could you tell us a little bit about your biggest trading wins and the biggest trading loss? Anything that stands out as the most memorable?
So There's a couple big ones that are memorable, obviously, because of the size of them. So, it was probably it was an oversold bounce on Canopy growth. So this is probably towards the end of the MJ heydays, where everything was selling off, and multiple days of double-digit red days. And so I'd play oversold bounces, and this is probably my bread and butter is when things are falling off a cliff and they're kind of dropping like a knife. Trying to evaluate when this bounce is going to happen, because when the bounces do happen, they're often very sharp and they're in a double-digit percentage gains as well. So Canopy growth was selling off. I think this is probably, I would say, the end of 2018. I would say October 2018. And so Canopy was selling off, and it was setting up for a gap down day. And the way I prepare for oversold bounce is I don't sleep.
What?
I don't sleep. And then the next morning, I can't even say I wake up, right? I'd be like kind of just on the couch preparing for my big trades. And I knew this was going to be a really big trade, because I knew the Canopy growth pre-market was gapping down. At this point, I started options trading. So I trade a lot of options. And even to this day, I trade a lot of options. And so I was scouting out the different strikes that I wanted. And I was going to play weekly options to take advantage of this oversold bounce opportunity. And so at this point in 2018, so 2017 was when I seeded my account again throughout this big MJ run. And then towards the end of 2018, I probably had close to a 7-figure trading account.
That's when you exited all your swing trades on the way up.
That's right.
Yeah.
And then so I'm managing this large account now, and I'm sitting there and be like, how am I going to grow this account so that I can retire? And at this point, I was like, how am I going to grow this account so I can retire? At this point, I still had a job, right? And be like, and I'm like, well, this is a really high probability setup. I've seen this before. It's happened a million times. Every time I've seen it, it's always bounced. And, always is a bad word. We know.
Yeah. Almost always.
Always bounce, because, you're going to get punched in the face. It was one day. So, I had so much conviction in this trade. I knew the setup. I've seen it before. I talked to everyone. At this point, I was also in another trading group. I talked to these other people. They confirmed. Now that increases my bias. But personally, I know, and I had conviction in this trade. So 6:30 our time, market opens. I'm spamming the buy button on some of these options, and these are weekly options. My broker, Questrade, just gives them a little bit of advertising here. They only allowed me to buy a certain amount of options at a time. And so trying to buy almost a 7-figure amount of options was took me almost a couple minutes just hitting the buy button. And so I was all in on options.
Oh my God.
On my account on an oversold bounce play on a weekly option.
Well, do you remember the strike price?
I don't remember right.
Calls, right?
Yeah, they were all calls. They were all calls, and so I think I had 2 different strikes. One for the current week and one for the next week.
But it's already short term.
That's right. And I'm sitting there with a few $100,000 in call options, and I'm sitting there. I'm just like, okay, I bought it all. I know what's supposed to happen. I shut everything down.
What? You did not. You shut down your chart?
I shut down everything.
Oh my God.
I closed my computer.
I'm like sweating now.
Yeah. I shut down everything.
Oh no.
And I took a 2-hour nap.
What? No. Oh my God.
I was like, but that was my trading strategy. And I was like, this is going to work out or it's not. Because the probabilities are it's going to work out. So I don't want any sort of small term fluctuations in price to shake me out of the trade. Because I know what's going to happen. I know this chart's going to bounce. I don't even care if it gets a new low, because even if it does, this is going to bounce. And I took my 2-hour nap, and I actually fell asleep because I didn't sleep that night. I woke up 2 hours later, and my account was up close to a 7-figure number.
Oh my God.
And I'm sitting there and just like, all right, let's hit some sells. Right?
So you start spamming the sell button.
I started spamming the sell button, right? Like,
oh my God.
And I only sold like a partial amount of it. I swung it into the next day. thinking that we would get some continuation on the bounce because these bounces usually get some follow through.
Yeah, because they sell off for multiple days.
That's right.
And bounce for 1, 2, 3-ish.
That's right.
Days.
That's what I was expecting, except this one bounced into a freaking triangle.
Oh,
so the next day it didn't gap up, it didn't do anything. Instead it started consolidating again. So I actually lost some of that back to the market. But that's the price we pay for trying to have some risk on so that we can get continuation in our moves. When you're right, you want to let some of it mature. And that's my trading philosophy. And so I don't sell it all. I'll take some of it just to lock in some of that gain. So at least I stay on a winning trade. But this particular trade, I gave back a decent amount because I swung a major portion of it and lost it back on the next day. Lost some of it back the next day. Yeah.
Do you remember those options? What percentage were you up when you were selling some of it?
So I was all in. So it was only like I actually took. I was all in on options. I was all in on options. And I would say the percentage probably wasn't very it's not like 1,000% or anything. It was between 100 to 200%.
That's still.
Yeah,
that's still pretty good.
Yeah, it was pretty darn good. If I took a strike that was slightly further out of the money, I probably would have gotten 400, 500%. But I took something more at the money and actually some of it that's in the money.
Right.
That's
good. I think.
Stay it on. Because I'm all in. I want to err on the side of caution. If this just moves sideways, I'm going to lose everything, right? But then again, at this point, I still had my job.
That's true. I guess you had a backup plan.
I had my backup plan. I didn't quit my job. I didn't, and most of this was house money. This money I didn't have a few years earlier, right?
Were you married at that time?
Not married. I was still not married at the time.
Do you think if you were married, you would have taken less risk?
It all depends on your life scenario, right? If you don't have a job, if you're trying to make it big and you're trying to trade full time, and you don't have a job, it makes it a lot more difficult because you still got to sustain your lifestyle.
Yeah.
You still need to pay a mortgage. You have expenses to pay.
Yeah.
And so all those things put pressure on your trading. If trading is your sole income source, right? So because I had a job, I was able to take that kind of risk. Today
the all-in risk.
Yes, all-in risk.
Would you do that now today?
No, of course not.
Oh, okay.
No.
With the kids, with the house. Yeah.
I have dependents. There's bills to pay, right?
Yeah.
And last thing I want to do is go back to working. I would have failed as a trader if I had to take up a job again. So, in terms of taking risks today, it would be when I'm making a trade, it wouldn't move my account maybe 2 to 3% max.
Okay.
So I think
that's a lot more conservative than before.
Very conservative.
Yeah.
But even then, when I'm taking a 2 or 3% trade, it'd be more than a week that I would work at a job, or 2 weeks, or even sometimes months, right?
Yeah.
And I think that number varies, 2 to 3% on any sort of random trade, that I'm thinking is going to work out in my favor. But let's say there's another one of these big trades that are coming, like a CGC trade.
Yeah.
I wouldn't go all in, but I would maybe risk up to 5 to 10% of my account to try to grow my account. Because I see a high probability trade brewing. And so, this goes to say when we're trading, everyone has to have a little bit of risk tolerance and a little bit of degen.
For sure.
Yeah.
So on that trade, how long did it take for you to exit all of your options?
That was probably
positions?
1 week. A 1 week trade. Yeah.
Did you swing? Did you roll to the next strike for next week, or you just sell?
That was it.
Oh, okay.
That was the trade, and I kind of basked in those gains for a little bit. When I'm talking about emotions, I was ecstatic at that point.
Oh, that's your biggest win at the time, right?
Probably my biggest win at that time.
Okay.
And actually, I would say it's my biggest win still ever.
Okay.
And
that was almost seven figures.
Almost.
You said because you went all in on your account.
Yeah, but. We win some, we lose some, right?
For
so
sure.
when your wins become that big, your losses become just as big when you're starting to make the same types of risks. And so, everyone wants to live in the dreamland where you're making that kind of money every day, but it doesn't happen. And and this is what I talk about. It's hard to talk to a lot of people about this stuff. It's because they look at that and say, wow, you could really retire off that money.
You can just do this every day, right?
Why don't you go out and buy a boat, or buy a few more condos?
Yeah.
No, I can't. If you want to truly retire, you have to financially plan for the rest of your life because you don't have any other income source.
Yeah.
So you gotta, whatever you have in your bank account is whatever you have, and you gotta live off that for the rest of your life. You know, it's a different psychology when you don't have a job.
Okay. So now you took that, your biggest win ever in 2018, right?
2018.
Okay.
And you know, 2019 I actually had a red year because the market, you know, wasn't great in the MJ sector, so I had to move on. I had to move on to different sectors, like yeah.
Before that, you're always staying in MJ.
That's right.
Okay.
So this is the MJ sector started you know, dying down. So it was forced me to pay attention to a lot of different sectors, like big tech, Nvidia, Tesla, Apple, all these big names, Microsoft. And at that time, it was still before the big runs in 2020, right? So all this experience I drew to really leverage on the big runs that we had in 2020 and 2021 when we had the big capital injection or money injection from the feds.
Money printer.
Money printer. So, you know, that really propelled my career as well in these last few years. Drawing on that experience.
So let's talk about your biggest loss now. Is that on the tech stocks or on the also on the MJ stocks?
It was on GME.
Oh, wait, what?
Yeah.
Were you long? Wait, were you long or short?
Your viewers are not going to love me over this one.
Were you long or short?
I was short.
Oh, that's why.
I was short.
Oh, no.
And you know, it wasn't
2021, right? Yeah, January 2021.
Okay, so that was the first run, January 2021. It was the second run that got me.
Oh, I see.
I can explain. I remember that day very clearly.
Oh, I think I know which day you were talking about.
March 5th.
It either made a lot of people or broke a lot of people.
February. End of February. GME had its second. So, you know, GME went to $500 or something.
Yeah.
Consolidated. I shouldn't even say consolidated. It sold off, and it hit $40.
Yeah.
And from 40, there was one day in the end of February where it rocketed back to like $170 after hours.
Yeah, I remember.
So, middle of the day here, I forget which day in February it was, but it was towards the end of February. And preceding that, I think it's good to know that, you know, I was having a great year so far in 2021. Absolute breakout year, because everything was just running in the early 2021. And so that played well with my trading style and my strategy. Momentum.
Yeah, for
momentum
sure.
trade. You just literally wake up every day. Sometimes I can't even sleep because I'd be swinging, again, all in on my account on these.
All in.
Yeah. It was stacks of 10, 20, 30% gains every day. Leading up to this GME trade. And so GME was breaking out from $40 middle of the day. I can't remember which day it was, but you viewers can go take a look at it.
I remember that day from 40, it went to 35 first.
Yeah.
And then it started bouncing near end of the day.
Volume started increasing.
Yeah.
All green. And it was just increasing. Now, you know, being the trader I am today, and you know, I actually should have known this before when I was trading then, is we're getting increasing bull volume. The candles are all green, all Maribozu candles, every single one that closed 15-minute, 5-minute, 15-minute candles, all green. And it was just starting to go parabolic.
Yeah.
And I was like, all right, this can't possibly go from 40 to 100 in a day. So I started opening naked puts.
Okay.
On $100 strikes.
Okay.
And I started selling. I started writing contracts.
Oh, you were selling puts.
I was selling puts. I was writing contracts.
Okay.
Big mistake number one, right? Like,
yeah.
You know, I'm always going to learn from it. And I've had a previous big loss. The loss previous to that was probably like a $200,000 or $300,000 loss on writing puts on Facebook earnings. And Facebook tanked 20%.
Yeah.
You know, a couple of years prior to that. So that was my biggest loss until this loss. Again, another loss from writing contracts. And every time the price rose, I sold a little more. I wrote a little more. Until probably towards the end of the day, I think GME was being halted throughout that day.
Yeah.
Every
I think
5
it closed
minutes.
around 70.
That's right.
Something like that.
70 or 80.
Yeah, something like that.
So it was halting every it had 5-minute halts.
Yeah.
So on and so forth. And then probably towards the end of the day, it was maybe Actually, it was 14 minutes left to the trading day. It went through another halt. And I was like, okay, I got to close this position. I'm closing in on a 6-figure loss, right?
Yeah.
On this position. And it halted one more time, 14 minutes left. And then I was like, okay, I'm going to close it after this halt. But the halt didn't end until the market closed.
Yeah.
And now I'm stuck with these. It was a 15-minute halt.
Oh my God.
With 14 minutes left to the trading day.
Yeah.
And now I'm freaking swinging these contracts here.
Overnight.
And you know what happened like after hours on GME?
Yeah. It went to 100.
It went to 170.
Yeah.
That, like, so and I had a significant amount of contracts. So I'm sitting there and I'm just like, oh my God, I'm in a bit of trouble here. And I'm like, okay, I got to hedge these contracts. I gotta buy stock.
Yeah.
I gotta buy stock. But at that point, Questrade, my brokerage, had froze my account.
Oh, because you were too. You were all in on the puts.
No, I wasn't all in. All in. I had enough to cover.
Yeah.
But the margin requirement on the contracts went up exponentially when GME started going up.
Yeah.
So all of a sudden, my account doesn't have enough margin to keep those contracts, and so they didn't allow me to trade. It actually said on my brokers, I was like, okay, well, I'm a bit hooped right here, right? And then meanwhile, I got my chart. I'm just watching GMEs continue to rocket. I'm just like,
oh no!
Every $10 that stock was going up, I was losing $100,000.
Oh my God!
And I was going up $10 every like few minutes. And I was sitting there. I closed it all down. I'm just like, I went to my couch, and I just sat there for a little bit. And I was like,
oh, shit.
I'm just thinking like, okay, what do I do? How can I handle this?
This is 2021. You were married by then.
I was married by then. Yeah.
Yeah. Okay.
So a bit of a problem going on, right? And so I had confidence that it wasn't going to stay at this price. The next day it did tank, but I had a problem right now at that point.
Yeah.
So, and I couldn't even hedge it.
Yeah.
And so the head honcho at the brokerage firm gave me a call.
Oh, wait, Questrade gave you a call?
I'm looking at my phone like, Questrade's calling me. I know what this is about. I pick up the call and they're like, hi, is this Keith, right? And I'm like, yes, I know what you're calling about. I know what you're calling about. I need some help. And they're like, all right, we see your account. I have my other trader here. So there's 2 guys on the phone with me, and we're like, so how do you want to handle this? I'm like, I need to hedge. I need you guys' help to help me hedge this. So here I am. The guy is like, okay, we're gonna open it up so that you can hedge your options. And at this point, the options were, the delta was pretty much 1-to-1. So all I had to do is do a bit of calculation to see how many shares I need to hedge. And it ended up buying pretty much, I hedged the entire position after hours.
Oh, okay.
Yeah.
How many shares did you end up buying? Do you remember?
8,000 shares at 100 something.
At $100. Okay. Oh, okay.
Yeah. So it was a lot because I wasn't expecting those contracts to go, and these are big numbers, but I think my emotions at that time were pretty wild, but I handle adversity pretty well, but every time there's a new record that gets set, you're into new territory on how to manage those emotions. It's safe to say right now, there's no really big loss that phases me anymore. It's just management of numbers in your account. But yeah, at that time I just sat there. I was like, all right, the entire position is hedged.
Okay.
I put down my phone. I just kind of sat there and took a breath. I'm like, and then I pulled out my calculator. I'm like, okay, what's this loss looking like?
Oh,
right?
no.
What's this loss looking like? And it wasn't quite a 7-figure loss. I think it was maybe I want to say $600,000, $700,000 loss. But what happened in the ensuing days was that I did a bit of revenge trading, ended up converting that to a good 7-figure loss.
Okay.
So it was. I'm still here today. I'm still trading, right? I've recovered.
I'm glad you're here.
I've recovered from that, but I think I don't think, this is my bias towards my own bad trade, but I would not have ever swung that position. I was closing in on, a good 6-figure loss. And, at that point, this still wasn't my biggest loss ever. I was fully intending on closing that position. It would have been idiotic to swing that position, but they forced, because the way the halt ended up, it forced me to swing it. And then I was all of a sudden big, like hot water.
Yeah.
So I think, the number one lesson here to be learned is, never write naked options. Always have some sort of hedge involved. And if you were to play options, always buy them. Don't write them, right?
So did you close out that trade and the hedge the next day?
Oh yeah, I was closing it. It was kind of like hand in hand. Close close. And that's how I ended up with like that.
Good thing you hedged. Like it probably helped a bit, right?
Oh no, I hedged at the top.
Oh wait, I think it didn't gap up next day.
It did gap up, but so after hours I started hedging when it started, almost started
100.
peaking.
Oh.
At that point, I didn't care. I'm just like,
okay.
I'm just gonna hedge this. I don't really care what it's at.
Yeah.
It's already a monumental loss. But if I ended up swinging, if I didn't take the hedge, I probably would be okay. But then, the scary thing was, the guy on the phone was like, okay, well, you don't have to take the hedge, but this is where we would close your account.
Oh, wait, really? After hours, they can do that?
Yeah. Well, they wouldn't close my account, but they were like, this is where you go bankrupt. They told me a number, right? Like, and then I was okay. I was like, there's no way it's hitting that like after hours. But then, at that time, you don't know what's going to happen to GME. Like, we've seen what GME could do. Yeah. So I was like, okay, let's just hedge it. Like, I'd rather trade another day than to leave it up to risk or chance that I'm going to, potentially bankrupt. So that was a very, very scary day. In my trading career, because I made a pretty bad mistake, and it was against all my principles. It was against a lot of the things I did, and I think the primary reason why I took that trade was because I was having such a great year.
It was risk on environment.
I was like,
too.
It was a risk on environment. I was like, okay, I could probably take a bit of risk here, and I could open it up. And it was at that time it was a harmless trade. It was trading at like 60. I opened up. I wrote contracts for 100 calls, and it was a good 60% away. And I was like, all right, let's just take some premium here. And the reason why I wrote contracts is because this strategy has worked well for me in the past. Until something like this happens. Yeah. It wipes out everything you've made in the previous however many years, and then some, right? And so, I would say to traders, like, we're nothing like these market makers that write contracts. These people have endless pockets. We don't. Like, they can take big losses from people who want to make big bets. But if you're writing contracts, like, one day it's going to come and burn you and bankrupt you, right? So, I would say I'm lucky. I don't like to use that word very, very often. I would say I'm lucky that I had a pretty good year. I was able to absorb that loss. Okay, that's good. And I was able to bounce back from that, from my trading experiences, and really work towards higher highs.
Yeah, I think 2020 and 21 were the first years that it became so common for brokers to adjust margin maintenance requirements for individual stocks, like intraday. Yeah, that's never happened to me before. Like, usually, it would be like, from 25% to 50, but with a lot of these, like 25 to 100 intraday.
A few hundred sometimes.
Yeah.
Yeah. So it was insane. It was crazy times. So, yeah, I think, I'll never forget that one. I actually haven't told a lot of people about that either. I guess until today. Did
you tell your wife about it?
Oh yeah, I told her. Okay. I immediately got out into my car and I drove and met a friend, and I sat there, another friend that day trades, and I just sat there with him, and I was like, okay, I took a really dumb trade today, right? And he guessed exactly what I did. Oh. And he even guessed what strike I took. He knew me. He knew how he knows how I trade.
Knows
I was like, how the heck did you know? Like, so anyways, at that point I was like, okay, I'm still alive here. Let's move on. I took a week break and I just kept trading, and I'm okay. I never took that kind of risk ever again. Yeah. And just grinded my way back up. So again, just focusing on what I do best, and never doing stupid things and taking idiotic trades, right? But it's hard to not do it when you're on a roll.
Yeah.
When you're on a roll and you feel like you're at top of the world, your emotions are not really in check. You're not 60-40 is something I always explain to people. And that's what I was taught is when you're having good days, you know, you want to be on a 60% happiness level because you're going to have bad days eventually. And you don't want to feel like you're on the edge of like a bridge and not feeling great. So, you know, be happy, but not be that happy when you have big trades.
Yeah.
Because there's going to be bad days and you don't want to be that sad when you have sad days or bad days, right? So keep emotions in check, and that's how we can keep our trades in check. And at that point in time, definitely my emotions were way past 60, you know, on the upscale. And then when I took that big loss, it was way past 40.
A lot of lessons to be learned from, I guess, both the wins and the losses. Yeah.
I would say losses matter more because they actually they develop laws in your trading. Laws, you don't break those laws. And
so after that, you haven't wrote any naked contracts since?
No.
Or just like a smaller amount?
No, and if they were naked contracts, they'd be hedged. So it would be a strategy versus just you know, one directional trade.
Yeah, just a YOLO.
Yeah, no, it's definitely. I would never do that again, and I don't recommend anyone to do it. And you know, people have asked me before. It's like easy money, right? Like writing contracts. Ooh. Yeah, it is easy money, but until you get hit in the face, until that 0.1% off chance that something bad happens, and you know, news comes out, and all of a sudden you're thousands of percent down. Could be thousands, right?
Yeah,
and so
for
it's
sure.
Never write naked contracts. Buy them. Don't write them.
I'm not gonna lie, I'm like sweating after that story. I was sweating the first time when you told us about your biggest win ever, when you went all in. I'm sweating again with the GME
There's a
loss.
lot of sweating.
Yeah. Yeah. So after that, those biggest highs and biggest lows in 2021, now it's like 2 years later. What are you focused on? I know you said you're not as risk on as before. That's good. What are you focused on now outside of trading?
Definitely more of I have a kid now, and so you know, focusing on family and growing the family. I like gardening because it really.
You like gardening?
I like gardening. I'm a bit of a green thumb. I like taking care of my garden because I like watching things grow. Not only my account. I don't just like watching my account grow. I like watching like flowers grow. Something that you could put effort into and watch it really develop, right? And I find a bit of solace in that, just to counteract, you know, the stressfulness of trading.
There's something zen about gardening.
Yeah.
I'm trying to say as if I do it a lot, but I don't.
It's quiet. You see a new leaf growing from your plant that you just planted, and you just get so excited. You're like, wow, I bring my wife out. Do you see this leaf that's growing? Like, dang, it's
like
awesome.
My trading account is blossoming.
Then my wife gets excited. Wow, just bring the neighbors over. And like, so it's fun, I think. But the main thing is like I get to turn my brain off, stop thinking, because we're always thinking about these trades. Yeah. And really just take a break from a mental break from kind of the hustle and bustle of trading. And so I've really kind of disengaged myself from trading groups now. And I was part of one where I was helping. I wasn't running it, but I was actually a big contributor, and just sharing my experiences. And so I think gardening really helps me kind of relax. Okay. And then now I'm starting a business venture. So I've always wanted to become a business owner. Okay. And you know, kind of owning something and again watching something grow, right? Yeah. And being
but in real life.
In real life, that's right. Being able to hire employees. And that business is actually going to be a pickleball business where we rent out courts. Okay. And because pickleball is one of the fastest growing sports in North America here, and especially in the States, it's growing exponentially. You know, not to say that I play a lot of pickleball, but I have a business partner who's a good friend of mine that plays a lot of pickleball. And you know, in Vancouver, especially here in the Lower Mainland, and actually in Canada, there's not a lot of spaces for this kind of recreational play, especially indoor spaces. There's a lot of outdoor spaces. Yeah. So a lot of people play outdoor pickleball, but you know, here in Vancouver, our weather isn't always the greatest, and even when it's good, the weather changes or we get smoke from our wildfires and all of a sudden you can't play outside. It could be too hot in the afternoon, right?
Yeah.
So, it's good to have an indoor experience where the climate is controlled. We get to control the lighting, and you can play pretty much any time of the day you want and comfortably and know what to expect, right? So that's kind of what we're offering. But yeah, that's coming soon, hopefully, and we're super excited to open that venture.
Yeah.
But so that's kind of like, these two things are kind of taking up my time right now, is between trading and not so much full-time trading anymore, but waking up not at 6:30 a.m., waking up a little further in the day and just
what time are we talking about exactly?
I'm waking up at like 7:30 now. Like
7:30. Oh, that's not bad. That's like 10:30 a.m. market time.
That's right. And then so at that time, usually these flags start forming, and I'm just like, okay, like what's the runner today? What's the momentum stock today? I'm just looking to see. All right, sit there for an hour, see. All right, what's going to get a bit of continuation here throughout the day? Make a few small trades here and there. Hopefully book in a couple wins, shut her down, and then go and figure out all this business stuff that I'm working on. And then the other time now I'm just working on, again, gardening and then, playing with my kids. So it's really nice from that regard, but still very busy. I would say busier than I am when I was working full time at a job.
Oh yeah.
Everything's a job now, right?
Yeah, everything is.
But they're more enjoyable.
You quit your 9 to 5 to work 5 to 5.
Yeah.
Just kidding.
Oh, it's 5 to 5, almost all day.
Yeah. Oh, yeah. I haven't played pickleball, but
hey, come try it out. I'll invite you when it opens.
Okay. I need like a coach to help me. Yeah.
There's no coach needed. You just kind of pick it up like trading.
Really?
Yeah. You learn from your lessons.
Yeah. Go all in, right? At once.
Go all in. Go. Yeah.
No, please do not go all in. I need like a disclaimer. I am not suggesting you to go all in trading. Thank you for sharing so much about especially the specific details about your big wins and losses. I think a lot of times online people hear about the big wins, which they are important, but I think it's important for people to understand. On the other side, there's also the big losses. That's very important to build character and experience for any trader.
Mm-hmm. Yeah, your losses are the ones that should guide you on what not to do in the future, right? It's the ones we learn the most, and it's not a lesson that one specific person teaches. This is a lesson that everyone teaches. Is your losses should kind of guide you on what you should not do in the future, and how you should learn from them. Yeah. The wins are the wins are the ones that get people the most because they make you feel powerful. They make you feel like you're unstoppable. The losses are where it kind of stops you in your tracks and makes you evaluate your trading strategy, your trading plan, and tells you whether or not your trading strategy is even working, right? Because some people employ trading strategies that only work for so long, and all of a sudden, boom, it doesn't work anymore, and you're bankrupt again. So it's good.
Thank you, Keith, for sharing your story.
No, it's great. It's always exciting talking about trading.
Yeah.
Because I love trading, and the thrill we get behind it, because it is essentially
the highs and lows.
There's a bit of gambling aspect here, right?
Definitely.
And, I like to go to casino a lot before. Now I don't anymore because we got trading, right?
That's funny. Wait, online poker, right?
Online poker, sometimes in person. I like to play craps.
Oh, craps fun.
I like holding the dice and just throwing the dice, so it's fun. But it's great. It's great talking.
I hope you all got some valuable insights from my conversation with Keith. Once again, I want to remind everyone here to follow your own risk management tolerance and trading plans. Feel free to ask me any questions you may have down below, and remember to smash the like button if you enjoyed the video. And if you want to learn a different strategy from a pro trader, check out my interview over here.